Crypto Dog the Rescue here. Welcome to my channel. Today we're going over fundamental analysis in the crypto world. What fundamentals are you guys using? I'm going to show you what I'm using so you guys can get in, check out what I'm doing. If you guys love crypto, if you guys love rescuing dogs, you guys can help me out by hitting the like button, subscribing, hit the bell, and all that good stuff. Let's get right into it. All right, like I said, we want to go over fundamental analysis of crypto world and kind of what's analogous in the stock market and the crypto world, right? And I guess what's equivalent, in that sense. So we're gonna get right into it here. I got a lot of tabs open, so some of this stuff might kind of slow down a little bit, but we're gonna click them out as we go here. So let me minimize my big fat head here, and then we can go from there. All right, so as you can see in the market right now. It's at 10,373 with Bitcoin, and Ethereum's up to 373. So that's a good thing. Ethereum's taken off more than Bitcoin has. Bitcoin's just kind of going sideways. And we're going to get into that right now as to kind of what's going on. But what I really need to do is I need to really lay some groundwork here so you guys can kind of understand the fundamental analysis that I'm working off of, regardless of the news. Obviously you want to look at the news and you want to look at things. I'm showing you an investor's perspective, a macro point of view on how to invest correctly. Because again, when you trade and you invest, some things you can do, some things you can't. So, but it's easier for me to kind of show you the basics of an investor's point of view, and then you guys can kind of hone your own skills and then move into trading and what works for you based on what's working for you in the investment world. So it kind of, work in the macro, and then you can actually work in the micro. If you start in the micro and you don't know what's going on in the macro, you might get it completely wrong, right? And I've seen a lot, I've done it myself. I've seen a lot of people do it. And once I've inversed everything, I've gotten way more better results. Like I said, when I do my trades, I'm 7 out of 10, at least 7 out of 10, normally 8, but at the lowest 7 out of 10. And with my investments, they're all up. Regardless if they go down a little bit, they're all up at this point. So it's good to see. So let's get into some groundwork here, okay? I really need to really set this groundwork up so you guys can kind of understand what's going on. So in the stock market, all right, investors and traders, they all go off of the P/E ratio. The P/E ratio is kind of showing you what the fair value, I guess, and where it's actually, where a stock is actually priced at, right? Fair value to what it's actually priced at. So it'll show you things like, let's say for instance that it says that the P/E is it's a 15x right now over, I guess, the fair value price. So you got to kind of think about it this way, that let's say that it's let's just say that it's 5x, right? So it's a $15 right now actually for a P/E ratio, but it's only really fair valued at $10. So you're actually getting a $5 discount on that. You know what I mean, when you buy it. So that's how a lot of investors look at it that way. So a P/E ratios, and of course your earnings per share is a huge one too, but that is involved with the P/E ratio. So as you can see with the P/E ratio calculation, it's market value per share, which is basically the price divided by earnings per share, or vice versa, right? So keep that in mind. It's a very, very big thing that investors do. They want to get at a discount, and then when things start rising, the P/E ratio was correct. Nothing crazy happened, like COVID or anything, and it just made everything drop. So again, these are calculations. Nothing is actually for 100% for certain, but with the probabilities, the P/E ratio is one of the big things in the market. And of course, intrinsic value of the stock, which is what we're kind of talking about with the P/E ratio, is that if it's $15 and the intrinsic value, the fair value of it is actually $10, you're actually getting a $5 discount based on that calculation that it will be, I guess, going up from that fair value. So you're actually making, profit. Or if it goes down to $13, right, and you bought in, but your fair value is at 10, you're still $3 in discount, right? So it's kind of the way that investors think about things when they go in. So this is the intrinsic value of the stock. That's kind of what we're talking about. You have these models that you have to work with of calculations, and this dividend cash flow model is the most common one to do that. So this is just kind of, again, an overview. I don't want to give you too crazy of what's going on in the stock market, but you need to find something with the P/E ratio. Well, again, cryptocurrencies is not a stock, so you can't use that calculation. So you have to find Bitcoin's intrinsic value in a different way. And what they've done is that they basically have done a lot of assumptions here with basically the value is usage of it's a medium of exchange. Bitcoin is a medium of exchange, and then it's used as store value. So it's like a currency, but yet it's like gold too, so it has a store of value on it. So they've done these calculations with the methodologies, method 1, method 0, 1, 2, and 3, and it's all kind of different when it comes to method 0 refers to currency circulation. So just in that broadband sense. Now, you can look up these articles yourself, or I can put them in the description so you can click on them. But really what it comes down to is that the total estimate of the global value of mediums of exchange, right? All currencies, and stores of value, which is gold. And they didn't use silver in this, but mostly gold. It comes at 72.1 trillion US dollars. Now, basically what they're saying is if Bitcoin were to achieve 15% of this valuation, its market capitalization in today's money would be 10.8 trillion. We're still in the 100 millions, right? So that's kind of what they're calculating out once Bitcoin starts achieving mass adoption. With 21 million Bitcoin, obviously it gets rarer and rarer and rarer. They're saying that the one Bitcoin is going to go up to $514,000. That's 1,000 times its current price. Now, the bottom line is all models are wrong. Some are useful. And that's kind of what I'm saying with the P/E and everything on that. It's all about probabilities. It's all about probabilities, okay? So keep that in mind when it comes to Bitcoin's intrinsic value, okay? The way that they've kind of come up with the fair value of Bitcoin, okay? Now, another thing that I have to move into here, because this all goes in with the fundamental indicators and calculations, is Metcalfe's law. Okay, Metcalfe's law is basically a calculation or a formula that this Metcalfe guy made for telecommunications. And this was back in like 1980s, right? Yeah, 1980s is kind of when he did it. In 1993, it kind of was starting to take off a little bit more in regard to the Ethernet, right? Because in the 90s they had Ethernet going on, mostly in the colleges. Obviously, we had things moving, but not like the internet, right? The real strong internet. So basically, they took that and then they applied it to the networking, telecommunications, and the internet, right? Because that's what we were back then. We were kind of on phone jacks still, kind of running things, right? So the limitations of it is the quantifying the value of a network, right? It's the difficulty of it. And then that's kind of where this whole Metcalfe thing has come in, is they've kind of perfected this kind of triangular model of n minus 1, n times n minus 1 divided by 2. So that's proportional to n2, right? Or n squared. So moving in to this, they actually moved it into the internet, and they started doing these calculation, which is this calculation right here for Facebook, and they figured it out that actually the n squared works for larger things in the cryptocurrency market. So in 2018, they applied it to the cryptocurrency Bitcoin and showed that Metcalfe's law determined over 70% of Bitcoin's value. That's not the whole picture, but that's 70% of the picture. So I want to kind of let you guys know about Metcalfe's law. The way it works is basically it'll do an n log n on smaller, or n squared for the larger values, right? And then n log n would be proportional to the small values. So that's the way that they've put this into play, and tried and true, because they've done all the research, because it's been 10 years. They now have data that they can run off of with Bitcoin. And in 2018, they were able to figure out that 70% of its value came from Metcalfe's law, which is a great calculation, right? So that calculation is then moved into these indicators and these other P/E ratios for cryptocurrency. So the first one that I use is the network value to transactions, okay, NVT ratio. Okay, one of the most basic ratios to understand valuation of crypto assets. And again, I'm showing you the investor's point of view for this. And the great thing about this is that they actually have indicators. So check it out on basically Tradingview, and then we'll go from there. This ratio is typically called the P/E ratio for crypto because it's one of the most basic metrics to determine fundamental value. It's what we want, right? Fundamental, fair value of it. If a cryptocurrency has a high network value, okay, and low network activity, then it's going to have a high NVT ratio. If a crypto asset has a medium network and a high network activity, then it's going to have a lower NVT ratio. The latter may indicate value is present because, again, we're analyzing network activity and always considering Metcalfe's law and network effect. So that's kind of putting everything in a nutshell. Again, that's why I had to lay this groundwork, network value and transactions. So, guys, keep that in mind when you guys are trading with this NVT. So let's go into that real quick on Tradingview here, and I'll show you that they actually have an indicator for this. Now, what I like about this indicator is it actually has kind of multiple things, all right? It's showing you kind of where it is in the market, but it actually works as kind of an RSI and also a MACD effect on theirs too. It's not an average of the moving average, so it's a different calculation of the way they got this NVT down here. So we're gonna move this up a little bit so you can kind of get a little bit more feeling of it and what's going on here. So this obviously jagged one is the actual NVT, okay? And then this is kind of the straight moving average of the actual NVT. So that's kind of gets considered more of a convergence divergence line, and then where it's actually sitting, right? So it's at about 130 right now, and it's gone down after that drop, and it's testing at the 10 MA over here. So it's a great thing to check it out and see where it is actually in the where it's sitting, right? So as you can see, I changed my settings to 100 because I do everything off 100 MA with 14 with I guess you would say bearish and bullish lines is at 90 and 175. So if it goes under 90, basically, if like you see it came down here, it went down in the 90s, right? I'm going to be bullish at that point because it's gone very, very far down. And then if it's gone over 175, I'm going to kind of consider that more, bearish. I need to start looking at things in a bearish sense. So again, an investor's point of view on that. So that's kind of what you have to look for on this. I put it on a 90-day moving average. So that's 90-day moving average of the NVT, which is this orange line. So keep that in mind, okay? So then I basically take it, I see which way it's moving, and I see where it is, on here, right? And then I'll open it up, and then I'll give it a score. Because again, 90 is bullish, 175 is bearish, and it kind of acts as a MACD RSI-ish kind of point of view. So at 135, 130 right now, kind of considering that neutral, right? Right there in the middle, not really showing me much, besides it's coming up possibly to, a crossover point, which could possibly be a buy point, right? But I don't use this fundamental for that because it's not a MACD. It doesn't work off convergence divergence moving average. So keep that in mind. So that's why I have this kind of set up for you guys for fundamental analysis. Let's just say it's neutral, all right? And we're going to go from there and then move forward into the next, indicator, fundamental thing. So that's the NVT ratio. Let's go back to this. So the next one I use is the unique addresses indicator, which is a great indicator in itself as well. The unique address indicator, great indicator. Let's see, where is that? Right here. And as you can see, I favorite everything. I'll pull it up first thing, fundamentals. I'll go sentiment, fundamentals, and then my technical analysis, and I'll make my decision off my technical analysis once I have all this information. So you can see on which way kind of, it's all jagged, the unique Bitcoin addresses that are actually being used right now. And right now, as you can see, it jagged up and now it's going back down. Now, what you're actually looking for is which way is it actually been moving in that respect. Is it going sideways? Is it going up? Is it going down? You know what I mean? Up, down, sideways, up. You know what I mean? So in that respect, right, of the unique, right, if it's rising, then it's bullish. If it's falling, then it's bearish. And if it's steady, then it's neutral on unique daily addresses. So right now, it's kind of, I guess, there was a little up, and now it's kind of just going sideways. So again, it's neutral to me. So to me, that's neutral. Got to look at it that way, because these are trend indicators. You know what I mean? We're looking for points of huge changes, going on. As an investor, you're not looking for these small changes and you're looking for things that go, okay, all of a sudden, boom, pop, it goes up, right? So that's your unique daily addresses. Very easy to kind of consider which way is it going. From the bottom here, you can see. It's kind of easy to look at. If you want to draw a trend line, and you can kind of get more of a picture of what's going on here. I got a lot of things to go over, so we're just going to keep moving right through it. Again, click, like, subscribe, everything. If you guys are liking everything that you guys are seeing, and you guys are enjoying it and you're learning from it. I rescue dogs, and I trade crypto, I mine crypto, I invest crypto, I have a business in crypto and rescuing dogs. I'm going to open up a 501c. Your guys' help just by liking, subscribing, commenting, and doing all that helps me out greatly in this. So please do that for me and for the dogs that I'm rescuing, as I have a couple actually around me right now that I'm still taking care of, and it's been about a month. So next thing we're going to go into is the Mayer multiple. Okay, the Mayer multiple is one of the macro point of views for investors. It's a great indicator for the macro point of view, okay, and kind of where it will kind of give you a psychological turn in what's going on here and what the Mayer multiple is, right? And what it works, how it works, not what it is. Let's get into the Mayer multiple. Where is that? There you go. The Mayer multiple ratio. The Mayer multiple is one of the most established ratios after the NVT ratio. It was named after Trace Mayer, one of the first Bitcoin investors, and I'll show you his Twitter page here. It is a statistical estimator which shows how common a price level is in relation to its historical trading patterns using the 200-day average. Simply put, the Mayer multiple, price divided by a 200-day moving average. Very simple average on here, and he has his own Twitter page at tip Mayer multiple, which is right here. If everything opens up, and again, I got a lot of freaking things that are open right now. I should be Xing them out right now, but I just haven't yet. So right now, he does it on a daily basis. He tells you exactly what the Mayer multiple is for the day, and he's saying it's 1.17 on the 200 from the 200-day moving average with Bitcoin. So what does that mean, right? Well, what exactly does that mean? So what he's basically saying is the backtesting threshold is at 2.4x. Remember, we were talking about P&E ratios and how things are, 15x and 1x and 10x, and what are they normally, trading at? It's trading at 10x, but right now it's at 40x. Maybe it's at a good fair value right now, or it's overpriced, it's overvalued, right? So kind of what they're saying here is right here is the 2.4x. So it's basically saying if it hits this, you need to go bearish, and if it goes under the 1 point, which is the 1. Then you need to go bullish on everything. So another great thing about this is that it actually has a indicator for this. So again, I just write it down on everything on what's going on. The Mayer multiple, I change my settings to 0.9. And so if it goes under 0.9, I'm going to be bullish. And if it is greater than 1.50, I'm going to be bearish, right? Because I set my settings to 100 and 100. With a threshold of 1.75 instead of that 2.4 that they were showing you, right? So moving into that, as you can see from that last high that we had, it was kind of just hitting right on that 1.75, and that's where I say if it goes over that, you want to, or gets closer to that, you want to start thinking bearish. You want to start thinking bearish. And again, this kind of has an effect too with working as a MACD. You know what I mean? It kind of has those crossover effects of possibly where those sell points are and buy points are. Again, I don't use it for that, but you can consider that when you kind of look at the MACD and go, okay, everything kind of looks, quite the same. You know what I mean? Or pretty damn close. So moving in here, what is the Mayer multiple and what does it do? There's the 175, and like I said, if it goes under 0.90, then I'm going to be more bullish on my stuff, which basically saying it's a good time to buy. Basically what they're saying is with that 2.4 level or that 1.75 for me, well, I left it at, actually I haven't changed it yet, so let's change everything so you guys can kind of see what I'm talking about. That's 100. We're going to give this length to 100 for that MA, and we're going to change this to 1.75. So there we go. All right, so now you can see, as you can see with the 1.75, it went up. That's going to, I'm more now considering more to be bearish on that. So now it's crossed down underneath that moving average of the Mayer multiple, right? And it's gone, and now it's just kind of riding right at that one line. Okay, this is based on the 100, not the 200-day moving average. Because again, if it was based on the 200-day, it would be at 1.17, which is kind of odd because that's where my moving average is kind of sticking around at, is at 1.12 to 1.17. So weird how things kind of work together when it kind of come into a consolidation, kind of little bubble. What's going to happen? What's going on in the market? So that's telling me be more bullish. Be more bullish in your in the way that you're thinking at things. Fundamentals, right? Fundamentals. Sorry if my head's in the way. Fundamentals. All right. Be more bullish. It's down here at the 1, and then now it's just going sideways, right? So again, Mayer multiple, 1, more bullish. All right. Just be more bullish on everything. And so we're going to move into the daily transaction volume. Daily transaction volume. Let's move into that right here. Analyzing unique addresses used daily only gets you half of the picture in regards to the network activity. Okay, so if you want the evaluation value, then you also need to look at how much is being moved over a certain time period. The network transaction value indicator gives you a trend indicator, okay, trend value on whether the value moved over a network is rising, falling, or stable. If the daily value is rising, then the overall value of the network too should be rising. Conversely, is the value is falling, then the network value too is falling. So everything goes down. If it goes down, then you should be thinking that the network transactions are going down too, which basically transactions go down, everything else kind of trendly goes down with it. It's not used to any valuation metrics or process. The more value is being moved through the network, the more valuable the network. So it kind of has this elasticity effect with this value, you know what I mean, with the transaction value. So if it goes down, you know what I mean, it starts getting less elastic, and then it starts going up, and it gets more. So it's a good indicator to kind of tell you which way things are moving. Trend, right? As a trend on there. So where is that transaction value? I can show you real quick. So there you go. So this is the Bitcoin average transaction value as we're moving right now. So and it's and I got another indicator for this. So let me show you guys that once I can find it so you can see it. Here we go. So it's on intotheblock.com, which is a great website. You guys want a lot of fundamental and technical and sentiment analysis. It's not what I use on a normal basis, but it does have added value, you know what I mean, over the basics of these fundamentals, these technical analysis videos that I'm showing you, and the sentiment analysis. So right now, as you can see on here, constantly load up. The transaction volume in USD is, as you can see on here, let me get my fat head out of the way, and maybe you guys can actually kind of see everything on what's going on. And my fat head go away? There we go. There we go. So as you can see, it's at 32.29 billion with the total volume, and it's starting to go kind of down right now. So as you can see, it's rose up, you know what I mean? I guess broke the price level, and now going up with volume, but now it's starting to go down, right? So it depends on whether you're looking at it on daily level or you're looking at it from a macro level. I put it on a yearly chart, so it's kind of it's calculating the volume off that year chart. So that's what I want to see. Then I look into it on a daily level, and it's gone down from yesterday. So with that kind of being said, the daily trend, it's starting to go, I guess, bearish, not bullish. This was from yesterday. I was going to make this, but it's starting to go bullish, or bearish. So I need to change that to bearish. Yeah, if it will. But as you can see, it's on a nice rise incline. So I don't know how you want to look at it from that point of view, but you can. That it's gone up and now it's starting to possibly correct down a little bit. So starting to go a little bit bearish on there, right? Questionable on that one. Questionable on that one. But this is why I use more than one fundamental analysis. And really what I'll use is 5 total. Okay, and the mining cost is a good indicator as well. And this will show you, let me tell you what it shows you with the mining cost. This was a great article. This had a lot of my indicators in here that I've actually used. So mining cost indicator. At the height, we were paying $50. Okay, you could see the mining cost indicator was falling in mid-January. It was easy to see. Transactions fees were drastically falling, and that's because network activity was crashing. With less network activity, we can expect the value of the network, all right, to crash as well. This was a bearish indicator for the Bitcoin network. So now you'll notice that the graph, okay, below, that the trend's starting to rise. This seems to be more demand and more network activity. So looking into here, right, let's get rid of this. Let's get the mining cost indicator of Bitcoin. There we go. And as you can see, it's this kind of this green line here. That's kind of it's more, I guess, digital, not jagged. So as you can see, it's going sideways. Like I say, when it's going up, they're saying that the mining costs are going up, and then when it goes sideways, all right, and now this made a drop, right, and you didn't see any significance on the mining cost, but it's still steadily going sideways. So what does that mean? Rising means bullish, falling means bearish, and steady means neutral. So it really didn't show me anything on what's going on, or at least in a macro point of view, what to look for. You know what I mean? What's going on in the actual market right now, if there's anything huge going on in the market. So again, those are the 5 that I use, okay? That I want to show you everybody that's actually what I use in this market. And then I have testing. All right, I test. Right now, I'm testing the price mining cost break-even ratio. And that is a possibly a ratio that when you look at the various miners that are Bitcoin mining right now, all right, you can see that their break-even ratios are actually different. You know what I mean? Well, which one are you going to use? So this is why I'm actually looking into it right now to even see if it is going to do anything for me. And what you want to do is, at least what I'm trying to do, is I'm going to get the average of all these, and that's supposed to show you the Bitcoin bottom, right? Because when mining costs cost more than the actual coin, people stop mining 100%. You know what I mean? So that's kind of what they're saying. I stop. You know what I mean? I'm not going to mine Bitcoin or Ethereum or anything if I'm not making some sort of profit after all of my costs and everything involved in it. So, and that's kind of the way I work. Luckily, my electricity's gone down. So keep that in mind when you're looking at this stuff. You know what I mean on this, because that's a good indicator if I can figure it out, and I'll let you guys know if I can figure it out. You know what I mean? If it even works for us. And then the other one is the MVRV. Let me show you that market value to realistic value. Right? That's chart market value to realized value. Low points are entry points. High points are be cautious points, or possibly where it's going to consolidate and then break up into a new high. That's kind of what those are for, but we'll get into that when I can cross that bridge and actually consider that part of my fundamental repertoire, right? So it's not right now, so I'm not going to consider that. So keep in mind, and all these indicators and everything that you guys are using, and what actually works and what actually doesn't. I've tried and true these in the past 2 or 3 years, and I've never seen anybody really touching on these and putting it all together, right? So that's where I go into this. I say, okay, so this is starting to go bearish, right? Starting bearish. And if that's the case on here, fundamental analysis, what's going on? All right, it's neutral. It's neutral, all right? Trend indicator, the unique daily addresses, it's neutral right now. The NVT, it's neutral right now. All right, there's a little bit more bullish on this Mare multiple, okay, which is a great multiple. You know what I mean? You want to find something analogous with the stock market that uses earnings multiples, right? This is a Mare multiple. This is what checks out more of your intrinsic value of it, and if it's at a discount, and they're obviously saying that it's at a discount to buy in right now for Bitcoin. And that's just based on Bitcoin. Everybody thinks it's going to go up in the next, year, 2, 3, 4, 5 years. It's going to hugely go up. So that's what this kind of calculation is based on, which is why I pushed it down to the 100 MA. Again, if you're going to use 100 MAs and 200 MAs and things like that in your calculations, and especially in your technical analysis, you got to mirror that into everything you're using, or it doesn't work. And I really want to show you this picture if I can actually get it up and show you guys what's going on in here. Okay, so as you can see, you see this picture. Okay, I watch people, and this is what they're showing you. And then they tell you, well, I was wrong about which way it was going. And I'm like, look at how many indicators you guys are using. That is fucking crazy. I don't understand how you get anything out of there that actually works. Good dog. But that's what they show you. So, you guys keep that in mind. My name's Crypto Dog to the rescue. Please like, subscribe, hit the bell, comment below. Has no value to you, has great value to me and the dogs I'm rescuing now and in the future. You guys have a great day. Keep up the grind.